Hey, how's it going, guys? Welcome back to mentfx. And if you just saw the previous video where we spoke about trendline trading and retail-based trading that is based on pretty much random lines in the market and got really confused, I felt a little bit bad, so I wanted to put together a video where we do give you guys and get your minds thinking about smart money once again in the version of liquidity, in the version of understanding where we want to head and how we're going to head there and how we can get ourselves involved using the footprints of smart money to get involved in that direction. So as of this week, we just caught some stuff on gold and Bitcoin. As you remember, Bitcoin was just a 4-hour play, and we're just in sells on Bitcoin right now, partialed and at break even. So we're just waiting off the 4-hour chart. As you can see, we had a Wyckoff distribution that occurred right here. The breakdowns occurred, and we looked for the entries off of the last buy to sell with a little bit of inefficiency that lived inside of here. If we got on a lower time frame, we probably could have seen a much better setup inside of here, because inside of there, and if you want to go study it, most likely on a 5 or a 15 minute, you're going to see something along these lines with an entry somewhere in or around that area. I haven't looked at it, but I can guarantee you that you're going to see this occur there, because again, we are working with liquidity, not against it. So when I say that, what exactly do I mean? If you remember from the last video, when we get involved on trades and we, for instance, sell this, we're not just selling an actual zone. What we're doing is we're looking at previous price action and asking ourselves what happened, and understanding that as we're taking out orders and entering new orders on behalf of the smart money or the composite man, and price is beginning to actually shift, these shifts are not just because price wants to go lower, but it's because we have trapped certain people that were trying to sell that are now trying to get out of bad positions, and at the same time have sacrificed capital when we buy to sell to do that. And those sacrifices in capital and the capital that still needs to be unmitigated is shown to us with the imbalances that exist in the market. So we're able to expect for price to come up, mitigate, and continue falling in a given direction. Now, as it continues to fall and begins to meet new liquidity points lower, we begin to partial and break even with smart money. What I mean by that is, if there are buyers in this market, or if there's going to be more sellers in this market, they're going to exist below swing lows, and they're going to have stop losses below here. So on the behalf of smart money, your profit taking, if you are a smart money algorithmic trader, are going to be beyond swing points in the market, which means when price gets here, the odds of it continuing lower still exist. However, for price to right now completely reject and continue on a bullish run, because as you all remember, if we go to a daily chart, I've been bullish on this forever, and ever since we made this pullback down into the inefficiencies here and continued higher, I'm actually looking for the highs here to get cleared. Now, that said, price can easily continue back lower before coming higher. However, we are going to be a participant on both sides of the market and understand how we can do that with the idea of orders in the market. So when we get involved in these sells, one, we understand that these sells can go to a number of places. Either the areas that are left unmitigated with other sacrifices in capital that can be met now or in the future can come into that same area for that same reason, right? These two areas function as the same way, or this third area, which functions the same way. Now, if you look at this third area, the orders that we'd have to take out to get into new orders would be below this low, which is why, as you can see, that is my first point of breaking even or partialing on a trade. Now, that said, this is a 4-hour chart. If I had gone and found a trade in here on a 15 or 5 minute, this same partial would have been a 1 to 10, 1 to 20, or a much higher partial. However, the way you approach the market should be the same regardless of what time frame you do it on, right? And regardless of what lows exist. If you're getting involved on a daily or a weekly time frame, your partials, or at least your management of the trade, should still be in line with how orders are being facilitated in the market and met on the opposite end from smart money. Because if there's a point of liquidity that gets taken out and then price, for instance, right here rejected and took you out, you shouldn't have been in on that, or you should have at least been break even. Why? Because if price wanted to continue, it would show you that it wanted to continue running the lows set by other stop losses. Now, if that's not the case and there's more sellers in this specific market, for instance, there could be a trend line here right now that retail, for instance, is selling into really hard. If there's more sellers in this market, then this area right here is going to act as an area where we can look for hedges into buys to continue taking out people, which is again why smart money can get very confusing for a lot of people, since we are constantly operating on both ends of the market. Okay, so that's something that's really important, and you always have to keep that in mind. The reason smart money works and will continue to work is because your entries are based on the liquidation of other people in this market. And as long as you're entering on the liquidations of other people and the mitigations of those liquidations, you're ultimately going to be profitable. However, that's not financial advice. Go test it. Go look at it. This is my perspective. All that fun stuff. Do not sue me. Anyway, let's look at gold and look at what surpassed this week, because we took some beautiful sells and buys on gold this week. We're actually still in this sell, and we're going to expect it to come even lower. But from the very start of the week, let's go to a 3-month chart very quickly. Let's actually get rid of this very quick. Let's go like this. Let's get rid of all this. Let's get rid of this and this. So on the monthly, for the most part, as you can see, I've been expecting gold to continue making lows. Ever since it got pretty much above this high right here, I've been expecting it to come deeper into some areas in here. On the monthly, we have kind of the same thing occurring. We get down to the daily, and now we're getting into, you know, more of the actual price action that's happening right now. We just recently came to fill the inefficiencies here and mitigated the orders back from a while back. But we're also hitting a very, very large area of whatever you want to call it, support, or more like creating liquidity. So more likely than not, I'm still expecting, as you can see with this move right here, for these lows to be taken out, whether it's right now or a little bit down in the future. However, we are going to be prepared for that. Now, with that in mind, it does not mean we can't be buyers of this as well. And again, we're not buying the equal lows. What we're buying are the mitigations of the moves that were sold to be bought in previous areas that had price sacrificed, right? So this move here was to come and mitigate all the positions that existed right here, and now price is shifting higher. There were opportunities here, opportunities along the way, and now we are expecting price to continue a little bit higher into some of the buys to sells here, because again, there are consistently unmitigated areas in this entire market. When you're a smart money trader, you are not just a higher high, higher low trader looking for this. You're a trader that exists in all areas of the market, expecting the liquidation of certain people, the continuations in given directions, the mitigations of previous areas, the mitigations of new areas that took out previous areas, and the continuations to take out new people to mitigate previous areas to continue a certain direction. This is not trend based. It somewhat is. There's still a directional bias that can help you formulate ideas. However, this is more so based in the idea of manipulation, liquidation, and mitigation. And that is how the entire market will only move. If you try to create a retail way to trade smart money, which is, you know, trying to notice your perfect trend and trying to find the perfect break into the demand zone that will take you higher, then you're ultimately creating a retail system for yourself, right? We are operating constantly in a very flexible manner, understanding that orders are consistently being transferred in and out of this market, because what do we need to do whenever we go anywhere? We need to buy to sell, we need to sell to buy. So even if we have, for instance, equal lows, we're not trading them, we're trading the mitigations of certain areas, and sometimes those mitigations will result in what appear to be either a trend line formation or some kind of other formation. But my point of showing you this is that you can explain any move that we get into with some kind of retail pattern, but if you actually try to trade that retail pattern, you'll find much less success. Why is that? Because the retail patterns are designed to manipulate your eyes pretty much and your emotions, so that they will work sometimes and they'll look like they work, and that's why people continue to use them. But we're trading the actual mitigations in this market. So on the daily, as you can see, we have certain areas where we're expecting price to get into. I actually expected it to come deeper. However, at the time of this wick did not exist, so that actually came to liquidate some areas. That's the daily. We'll go down to the 4 hour now. Take a look at what we have right here. Once we make our way to the 4 hour chart, we open that up a little bit. You'll notice this area I had right here, which is the area I did expect price to make a move back down into. Now again, there's a lot of imbalance here and liquidity that exists here. So we could have expected it to come even deeper to test into some of these areas. However, my approach to this was that if we are to see prices come deeper into here, it's getting too close to this support, whatever you want to call it again, thereby it's more likely not to mitigate. Well, it could mitigate, but it's more so for mitigations that will then continue to liquidate new lows. Now, instead of that occurring, we instead had price come and play in or around this area. And at this specific point, we were on the lower time frames watching all this occur, right? Everything's just kind of being taken down to the fractals. This is why, again, I tell you that price is not based on time frames. Price is based on order flow. Time frames are only there to help you with the order flow. And I'm going to make a video on that too, as well as the rule of 30. So stay posted for those videos. But on the 15-minute, as you can see, we can see all the accumulations that happen here. You can go and study those yourself. But there's tons of accumulations here. I was actually in a sell here, I believe, at the start of the week. I don't know, I think I made a video on this off this distribution right here. I took a sell here that then became, a sell here and a sell here, both that were partialed and taken out and then broken even when price came back. So we got partials per break even on that, and then we finally continued to shift higher. So if you notice, those sells in here were actually, from my point, meant to, 1, we liquidated people, 2, we're mitigating, 3, we're mitigating with more liquidations inside, and I was expecting the move down into those areas. So if price ran, this would have been a very easy like 1 to 40, 1 to 80, or even higher. I think it was like a 1 to 130. Instead, it was only like a 1 to 6, and on top of that, it was partialed. So it was only like a 1 to 2 total, 2% locked in on that total, which, you know, you can argue is bad, whatever you want to argue on that, but that is how I approach the market. My management is not the best, but it's the way I like to manage, and it works for me. We continue to see price break higher structurally, but more so order flow structure based, right? Where orders are taking out lows, mitigating new areas of demand zones, continuing higher, creating intermediary lows, having retail believe their idea of higher highs and higher lows, taking those people out, making them forget what the fuck's going on, making them worry about what's happening, forming fake trend lines that technically get respected, but honestly also get liquidated, right? So again, after the fact, we look at these trend lines, and yes, they held, but the reality is, how would you have traded them, right? Always remember, even though this trend line might look good, and you could admit to yourself that you would have traded this, and it would have been a great setup, the reality of it is, the second you click back in price, even just a little bit, right? You click back in price. Let's even go to here. 1, you're already looking at this as a potential trend line that might be forming, right? 2, you're looking at this as a potential trend line. 3, you're looking at this as a trend line. 4, you're looking at this as resistance, so on and so forth. And now you have 1, 2, 3 patterns. Now you have fans all over the place, and you have no clue which one to trade. Do you buy this? Do you buy this pin bar until it breaks down? Do you start buying this? But wait, it liquidates you. Where's your stop loss, right? And again, retail logic, the mass retail logic. I know I'm a retail trader. Please don't hate on me in the comments. The mass retail logic available to people, which is trading with little fun little V zones that create liquidity and then liquidate them in every direction possible. The fun little trend lines that are fake trend lines that become new trend lines that become new trend lines and then end up holding, or whatever it is, are made to liquidate you as a retail trader. So let's actually go back here. We don't need to talk about that too much, but ultimately what we have is we have these continuations higher. So my expectation was that if we are to continue, we'd want to see a move back into the demand zones down in this area right here, which is what we just had occur today, which is why the sells that I have on this right here are probably not going to be the greatest, because I'm still holding them to come lower. But as you can see, we partialed here once, partialed here again. Actually, no, I partialed 3 times on this, so let's be real with this. I think I partialed under this low right here at this demand zone at the beginning, so we'll draw that out perfectly. So we had 3 partials, and again, overall the trade itself ran 1 to 47. If you had balls of steel and you're literally Superman and you just held on to this and then said, yeah, I'm gonna close at 1 to 50 right here, but you know, I'm not Superman, so I'm only Batman. I closed at about 1 to 6 for 3%, at 1 to 17 for about what is that, 17 over 2, it's like 9 over 2 for another 4.5, and then at 1 to 46, which is now only about 5%, right? So it's 5R, 6R, and like 2R. And again, I don't risk 1% on every trade. The risk on this trade was about 0.2% because I like to keep my risk management very small. So that's exactly how I approached that specific trade. But nonetheless, let's talk about how we actually got into it. So as you guys can all see, we do have these structure breaks higher, and as these structure breaks higher are met, we believe that price wants to make a move back into demand zones that exist, right? Whether it's this one or this one, to continue this bullish push, unless we're going to see price finally break down and come meet those lower areas and potentially even come to clear the liquidity that lies below the equal lows here and here on that higher time frame, right? Because we're always not operating on one time frame, we're operating order flow based. Okay, the time frames only help us see how that order flow is being delivered. That's it. We are constantly operating on all time frames. Okay, so from that end, I think I was on a 5-minute when I was watching this breakdown. Very quickly, you can see what happened up here. Structure on behalf of smart money began to actually shift after undergoing a distribution up here. We had this large shift down. At this point, I was still not involved in this market. Price moved back up here, shifting into more buys to sells, thereby showing us that one, okay, we're already having those things occur. We have one, liquidity being taken out. There are orders that are being transferred into the hands of someone else. Those orders are then being taken lower, and at the same time creating new orders that are now being liquidated again, that are also coming to mitigate potential buys to sells in the past. As those buy to sells are taken out, we have prices come lower, taking out more people, and showing that structure shifting again on lower time frames and higher time frames, because order flow again is not time frame based, it's price based. And on this move back up, we were watching this area right here for the entries, and I believe this was a 30-second entry. And I will leave that to you to go and find. Actually, fuck it, I'll show you guys. It doesn't really matter. Here you have it. You can study this, you can watch it to try and figure out exactly where I got involved, but there's a Wyckoff in, oops, there's multiple opportunities here, but there's a Wyckoff in here. There's a larger Wyckoff in here, and there's a Wyckoff in, oops, in here. So all these are Wyckoffs, and this is not where the entry was. The entry was right about here, off this low, like that, with the stop loss just above this high. And this is the entry we took on gold at the start of the week, and since then have pretty much been holding it. And that's how we got involved, right? Understanding that price is liquidating people, getting involved on those liquidations and on the mitigations. So we understand that if we are correct about what we're doing, smart money will want to take it to completely new lows, meeting all the liquidity that we've created in here, whether it's in the form of trend lines, in the form of some kind of random W pattern, in the form of some kind of other little encapsulating pattern. I don't even know what these are called, but honestly, anytime you can draw a line of respected price and another line of respected price, it's some kind of pattern for retail. I don't know what they call them, little shark fins, harmonics. It doesn't really matter. The point is they're intended and made for the purpose of creating a range and creating emotional FOMOing, okay? And when that occurs, it gives the composite man and smart money basically the ability to liquidate those people and get involved on a given direction. So hopefully this video made sense. Thank you so much for watching, guys, and I will see you in the next video. And here's the breakdown of this whole thing, right? If we can load now, that'd be fantastic. Yeah, and here's that breakdown of that, and we can go on to a higher time frame to show that, since it's a little bit zoomed in there, and it might get a little confusing, maybe like a 3-minute. Get rid of our little shark tooth. So yeah, we had price actually come down into here. I think I was asleep at this time, otherwise I might have looked for a buy inside of here. Oh no, I was awake, but I didn't see a good setup for myself. But there are some setups in here that you might have been able to take. Distribution happened. I actually tried to get a sell in over here, however, never got the chance to do that, and then price did liquidate that. Never got a sell though, so it's all good. And there were opportunities here that we just spoke about. However, I wasn't able to take them because I did not like the formation. The beautiful thing about smart money is that you have a variety of concepts available to you that you can refine to your own liking, and you can refine them to have your entirely own system. And because the market is fractal and allows these opportunities to happen everywhere, you don't have to FOMO yourself in. You can wait for new opportunities, and you understand that you don't have to be the first one in the market. Let the smart money show their hand, which is something else I'm going to cover in a future video. Thank you so much for watching, guys. If you want to learn further in a more structured and easier way to understand all this in a better and a more straightforward way, then check out the mentorship, which is available at only this website. It's the only one it's available at. Please do not get scammed. There's many people that are scamming. And other than that, I wish you guys a very, very profitable week, an amazing weekend, and most importantly, an amazing year. Thank you so much, all, and I'll see you in the next one.